All right, solid. All right, cool. You see my screen, Casey?
Yeah. People are saying post the link. Can you post the link in the chat?
Yeah, I'm about to post it right now. All right, cool. You see my screen, Casey?
Yeah. People are saying post the link. Can you post the link in the chat?
I'm echoing.
It's kind of weird echoing, but do you see um I'm sharing my screen. Do you see that?
I know. Go ahead. Share now. I'll share it first.
I have like the why is my audio messed up?
Okay. Where is it?
But you can hear me clearly, right?
Okay. Okay. Clearly.
Uh, I was gonna share mine, unless you
Yeah.
have
Yeah.
something.
Yeah. Yeah. Share. Share.
Do you see it?
Mhm. Tripping. I don't see nothing. Yo, Casey, you sure?
Yeah, share my screen. You can't see it.
No, I
Can you?
can't see it.
Let me try one more time. Let me stop sharing share again then. All right, I'm gonna try to share again. Share number 4.
All right, there we go.
All right, cool.
All
Here
right,
we
man.
go.
Let's go. Let's go. All right, cool. So let's do a quick intro. Appreciate y'all for being here, man. The Texas Heist, man. This is a free boot camp. Okay. It is gonna be a 4-day boot camp. Sunday, Monday, Tuesday, and Wednesday. Okay. So day one is going to be market structure. Okay. So we're gonna go talk about, the types of market profiles, open, high, low, close, up, high, lows, all that fair value absolute zones. Okay. Day two is going to be entry models. So these are the entry models we use at Texas Heist. So once you formed your bias with the market structure, now you have a direction or a narrative of where price wants to go. So you're gonna need your entry models to go ahead and get into the bank, do your C4s, throw your flashbangs and all of that. Okay. Then day three is going to be risk management. Okay. So now that you're in the trade, how are you going to manage that trade? Okay. Where's your TP? Where's your stop loss? How much are you risking of your account? Okay. And then on the fourth day, it's just going to kind of be like we're going to put everything together. So all three of us are we're going to go on the charts and basically just do top-down analysis and show you how we use all of this in conjunction. Okay. So we got back snatcher, presents a market structure. Let's go ahead and take it off, bro.
Yeah. Again, you said it all. So we're gonna get straight into it. But again, thank you guys for joining. So today I'm going to be covering the market structure 101 and 102. I say 102 because I'm gonna give you guys the basics, but at the same time, that 102 we're gonna go in more depth. So it's important to kind of for you guys to look forward to that on the charts. So it's gonna be basic. If you're new here, perfect. This is gonna be somewhat, I don't want to call it advanced, right? I know it's market structure 101 and 102, so it's a mix of the both. But ideally, you should have an understanding of smart money trading, smart money concepts. If you don't, that's okay. That's what we're here to teach as well. But most of the stuff I'm going to talk about today is going to be on the charts, and really it's going to be a PowerPoint, and then we're going to go into the charts. So I'll say buckle up. It's going to be a lot, right? The goal is to get you guys to get better at reading price and understanding how the markets are operating. So we're going to break down all of that, get into the details, the technicalities and everything, all the good stuff. So if you're here, make sure you're taking notes. Take notes because your brain just a processing system. If you don't write it down, you're not going to remember. And be sure to watch this video again because again, I'm going to go into some details on how you should view market structure and how I view it as well. And that'll give you an understanding of what price does and your expectations. So let's get straight into it. All right, let's get it. Let's get it. So there's four elements of price. Let's start right there. Four elements of price. Price is either doing one of the four: consolidating, expanding, reversing, or retracing. It's always one of those four that's going on your charts, no matter what. Consolidation, expansion, reversing, or retracing. Those are the four things you look forward to in your charts. And if you take a look here, what I just did very quickly here is I broke down NASDAQ, right? And this actually is exactly what happened this Friday. So you can see how price consolidated, right? All this consolidation right here, which is what's consolidation, just a little back and forth when price is stuck in a range. The price in the range is not an ideal condition to be trading in my opinion, unless if you're a scalper, perhaps you can buy and sell at the bottom of the range. I don't really do that, honestly speaking. That's kind of basic retail stuff, and I'm not really a fan of that unless we're dealing with a higher time frame. Then, of course, if price consolidates on a higher time frame, then we can definitely trade the highs and lows. But sticking to what we're talking about here, which is the four elements of price, price is consolidating right here. You see a long consolidation, just a lot of back and forth. And then we have price expand. Expansion is when price leaves an area with some energy, so it moves away. So that's price expanding, right? And then after a nice little expansion, we have a reversal. After reversal, price retraces. When we retrace again, now it expands lower again. So notice I have expansion on here twice because again, I said it's four elements of price, which is consolidation, expansion, reversal, retracement. When price obviously has shown the sign of reversal, retracing, then now it can expand lower. So expansion doesn't only mean it's going higher, it also means it's going lower. It's just expanding. Price is moving away from area. And in this case, it's clear as day what happened here. So this is picture perfect to a degree. And I want you guys to remember this. We're gonna actually come back to NASDAQ as we go into more details on the charts today. And it's gonna be broken down in more detail so you can see all the other elements I'm gonna add to your understanding. So just burn this image in your mind. This is what you should expect in price: consolidation, expansion, reversals, retracement, expansion. Okay, so four elements of price right there. Now, these are the topics I'm going to cover. So I already gave you the elements of price. Now, this is the real framework of today's lesson. So we're going to talk about the time frames. Higher time frame, that's what HCF stands for. And then lower time frame, that's LTF. And we're going to talk about the elements of time. We'll talk about the Asian session, midnight opening price, London session, and we're going to talk about the AM session and PM session. AM session and PM session specifically, this is like indices related, but for the most part, this is what we're going to cover. And then we're also going to go in details of structure and ranges, which would be discount premium. Now, if I feel like it, I'll add a bonus there, and maybe we'll break down the chart together, and I'll be able to like kind of analyze what my expectations are going into next week. So we'll see if I want to give that bonus. So stick tight to that and let's pay deep attention. So time frames, elements of time, structure, and ranges. So first of all, let's talk about higher time frame versus the lower time frame. The higher time frame should be the basis of determining your trade setup. It's important to make sure you frame all your trades on the minimum at a 1 hour chart or on a 1 hour chart, at minimum, 1 hour chart at minimum. Ideally, your setup should be based on a weekly, daily, or 4 hour setup. So those three time frames: weekly, daily, 4 hour. That's ideally where your trade setup should be coming from. If you're gonna step outside of that, I would say 1 hour time frame. Why? Institutional money tends to execute at these levels and not on the lower time frame. So when all these commercials, institutions are executing their price, buying and selling, transacting the markets, they're not necessarily looking at the 1 minute chart, 30-second chart, which we can do all of that, but there are levels on the higher time frame. that are predetermined, that's becomes quite obvious that sometimes that's where they're executing, and that's where you want to execute as well. They're not going to be on low time frames, especially when they're moving billions of dollars. So they need to execute on high time frames to get precise entries because they have large um, transactions they're trying to put in the market. So institutional money tends to execute at these levels and on a lower time frame. Now, how useful is your lower time frame? Well, it can be used to define your risk when applicable and used to validate a level, especially when you see a price reaction. So if you have a high time frame level that already have lined up, marked up, and price hits it on a lower time frame, when we start seeing some form of a reaction, that gives us context that the likelihood of that higher time frame level holding price or being a level of interest increases. And once price starts moving, you're able to then reduce your risk that you might have to put on a trade. The thing is, we have a high time frame. If you're just executing on there, if you want to, you can easily have a high time frame stop loss that works, but we like to be precise. And there's nothing wrong with being precise and getting in there and actually lowering your risk by understanding what happens on a lower time frame. And these are things we're going to talk about as we go deeper into the Texas Heist course, into Texas Heist Bootcamp. And perhaps I'll talk about that today as well. Now, let's talk about charts without time. Okay. So we just went through high time versus lower time frame. That's one element of time, right? Time frame. Now we're going to talk about time in general. So one thing we have to understand is the markets are ran by an algorithm. Okay. Since they're ran by an algorithm, there's two axes that are on your charts, x-axis, y-axis, right? Your x-axis has what on there? Your x-axis has price on there. No, sorry, x-axis has time on there. And then y-axis has price. Man, it's been a long time since I did some mathematics here or calculus, whatever. But x-axis, y-axis, point is vertically on your charts, you have price aligned there, and then horizontally on your y-axis, you have what? Price. I mean, you have time. Sorry, I'm not confused, guys. Point is, vertically is price, and then sideways there's time. Time is super important. Time is when is the markets execute based off time. So when there's no association of time on your charts, if you have no clue, if you're not paying attention, because when I first started trading, the reason why it's so important to understand this is when I first started trading, I was just looking at charts, and I started learning from IML guys, and they didn't really have a real understanding of trading, at least people I was learning from. So we are looking at charts, looking at different type of patterns, not understanding time, not understanding when the markets are, when the algorithm or when it's prime time to really execute. So it's gonna be very important. You're gonna see why we need to make sure we understand the different times that the markets operate at, and to make sure we have divisions of time on our charts. So when there's no association of time on your charts, you do not get any clarity. The charts just look like they are moving without any real rhythm. Here's an example, right? If you're looking at this right here, right, it's just a chart, movement. It's not really anything that shows you what price is like to do or what price has done in the previous session or anything of that nature. And when I look at this, I see something beautiful because I obviously understand the markets now. But when I first started, this is just me looking at maybe a bat pattern or a crab pattern or something like that. Those don't hold in the market. You really want to understand time. But this is how price and the charts look without any time shown on there. It's just candles. Now, charts with time. This brings more clarity and insight on what market participants have done for the previous day and session. Now, the same chart, right? Once you divide it with time, what time function or what time of the day am I really dividing the charts with vertically? Is the midnight opening price. So midnight opening New York time. So no matter where you are, whether you're in India, Australia, Texas, it doesn't matter. The time that the markets really start operating, the true time the markets are operating that you want to pay attention to is really midnight opening price. Now, price can move anytime. Of course, price is constantly moving. But when the markets, if you have midnight opening price on your charts, it's going to serve you well. And you can kind of see here again. Now we can look with clarity, right? You can see now on the 28th, price was able to move higher. The next day, it went lower. The next day, consolidated. The next day, drops and then reverses. So the two things drops, sold, and boom, reverses. I don't know why I just did that. So then reverses. Next day, what do you do? Nice consolidation. And then next day, price what? It goes higher. Next day, a little higher, then it'll drop. Next day, price just kind of consolidates. So now you have a more understanding, more in-depth details of why price is doing what it did on every single day. It gives you a better understanding, right? Because now, right, if price drops lower and then reverses, this might be a contest. Hold on, one day, all these other days just did one thing, one way up, one way down, consolidate. So they did boom, boom. So that might give you a contest of what price dropped, then went lower, dropped first, then went higher, perhaps returning to a reversal. And we're going to start moving higher. So it's important to really have the understanding of minimum opening price. And there's more details going to go into that. And you're going to see how important it is as we go along here. So true day. So without time, the charts and price seem unstructured. Understanding time and market operations, you get a clear view of what price is doing. You get a deeper understanding of why price moves to certain levels. True days when the market starts its operation. The time to focus on is the midnight opening price, which is 12 a.m. New York time. I really showed you guys on charts. Now we're gonna get into more details of time. So we're gonna get into the sessions. We have the Asia session. In the Asia session, this begins when the Asian markets and banks open and start their operations. During this time, price is usually seen consolidating. It's between 16 o'clock, 20 o'clock New York time. Everything's based off of New York time. So if your charts aren't on New York time, to make sure you do it, you make your charts reflect New York time going forward. Change your settings and make sure it's on New York time going forward to give you clarity. Because every time I mention time, it's going to be based off of New York time, right? New York is Wall Street. That's where the market started. The U.S. controls the markets. So that's why we run on U.S. time. We're the biggest market. But point is, 16 o'clock, 20 o'clock, that's Asian session. And during that time of the day, you can expect some type of consolidation, typically. And here's a depiction of that right here. You can see on this day, September 4th, we have price consolidating during 16, 20 o'clock. Then we have the London session. So first is Asian session, which really consolidates. That really sets up the market. And ideally, during that time, you don't want to see price move too aggressively. You want to see price consolidate. Consolidation is good because when you consolidate, price is like it's like stored energy. All that back and forth eventually is going to spring out in one direction or the other. So you want to see consolidation. And then when you see consolidation, you expect that energy to eventually start expanding outside of that range. So Asian session, consolidate. Now, if price is something outside of that, that becomes a different market profile, market condition. But now I'm going to a little bit more detail. Like I'm throwing a little hints here and there as we go along. But Asian session, for the most part, expect consolidation. Now, London session is between 2 a.m. and 5 a.m. New York time. During this time, price can move decently, but typically still presents some form of consolidation. Okay, so when we're doing our London loots, right, let's talk about the heist language here. We're running our London heist. The best time to run your heist is between 2 a.m. and 5 a.m. New York time. This is when you can expect the price moving out. I say decently here because I'm really referencing indices. So I was making this PowerPoint. It was really based off of indices, right? If you're trading the Forex market, 2 a.m. 5 a.m. is still prime time to catch a nice move. But with indices, I also expect some consolidation or just a decent move on London because really the U.S. markets open up during New York time. That's when our banks start moving money around, and that's when the markets have free movement. But during 2 and 5 a.m., if you're trading indices like specifically Nasdaq or S&P, there might be some movement, but not as much because that's the London market moving. So I don't really expect much during that time. And here it is again from 2 and 5 a.m. We can see London session creating that consolidation. Then we have a pre-AM session. Again, make sure you write this down because at the end of the day, your brain is a processing system, not a storage house. So you need to make sure you understand these times. Okay. So pre-AM session. Why is it called pre-AM session? The New York markets, the stock market opens at 9:30. Again, this is specifically for indices, right? There's elements of trading forex in here as well, right? For trading forex, then yes, 7 a.m. starts the session period, but when we're adding indices, 7 a.m. to 9:30 is the pre-AM session before the AM session. You can see nice movement, by the way, here on this session, even in your forex, starting at 7 a.m. 7 a.m. period across the board is when the markets start moving, whether you're trading forex or not, or indices. 7 a.m. is an important time on both angles. 7 a.m. to 9:30 is also important for indices in its pre-AM session. And you can see during the time, you see this way more movement compared to what happened in Asian and London. Look at all the movement that happened here from 7 to 9:30. Way more movement, prices jumping around there because the New York markets are open in general. The banks are open at 7 a.m. New York time. So there's way more movement here during that time. Then we have the AM session, which is 9:30 to 12 p.m. New York time. This is when the stock markets are open. This is when the markets are open. And price begins distributing and it starts its day trend. And you can see the same day. You can see as much as that there was some movement here. Look at the bigger movement that took place during the actual session. So we had some a little pre-workout, and then now the real workout takes place. So you could have caught a nice little movement here, a nice little heist, moving up price higher, but the real heist took place during the New York time. This is the real bank run you should have caught right here. And this is where price drives aggressively lower during the New York session, AM session. Then we have the PM session, which is from 1 p.m. to 4:15. We're keeping it military, 13 to 16:15 New York time. And price tends to continue what New York session has done and also can present opportunities for a nice trend as well. You know, and you want to pay attention to these sessions as well. Like if one session just consolidates, right? Here's another key element here I'm giving you guys. If everything just consolidates, you can expect the next session to eventually probably again push out some energy. Because the way the markets move, all that consolidation from small ranges equals to larger ranges. So the PM session, though, again, it can continue the trend that the New York session started and also presents opportunities again for a nice movement. You can see here on this day, it's just consolidated, right? This is just a consolidation day from 13 o'clock to 14, 15. It kept on showing hints of wanting to move lower, but never really expanded, so just consolidated for the most part. But if you're following what was happening in New York, look what happened. We start trading lower, and price does make moves trade lower, tries to go high again, then still tries to go lower. So it was trying to continue what New York started, but ended up just still consolidating. But if you stay bearish, stayed on the trend of New York, you probably have caught moves, especially if you want to do range trading, which I don't do. But top of the range, sell, top of the range, and no sell. But here we have consolidation during that PM session. Let's put it all together. So London again. So here we go. Let's take a deep breath. London. Consolidation. Oh, come on. London consolidation. AM session, right? What do we have? We have price do some type of expansion. New York expands again. And then what? AM session reverses, PM consolidates. So this also, if you go back to the four elements of price, now you see how we put it all together, right? Four elements of price. In each session, you got to ask yourself, what has price done in context with the elements of price? And you can see here we have consolidation, which is one element, right? Then we have what? An expansion higher, but it bled a little bit into New York session, AM session. So expansion. Then we had what? A reversal. And then we had another consolidation. So which one is missing here? We didn't have a retracement. That's all we didn't have this specific day. Well, if you look deeper though, we did have this little dive here, which was a retracement, right? Before price then expanding and higher. The point is understand those elements and add that to your understanding of each session. So the key thing is in each session, you want to see its price in one of the other. And it goes from one model to the next, meaning it goes from one profile to the next. So it might go from consolidation profile to an expansion profile, or from expansion profile to a reversal, and from reversal to consolidation. So each session, which is like a time clock, it's like you want to pay attention. Okay, at this time, boom, what am I expecting price to do? Look at what the previous session did. It consolidated. Next session might present an expansion. Or price expanded during this session. Or the expansion of the previous session, right, bled into this session. And when we start seeing some type of consolidation up here, perhaps we might change a profile to then reverse. So these are things you want to put into place, your sessions, and also adding in the elements of price. Hope you guys are tracking so far. And that's a lot. That's a lot,
No,
but
you
we're
got,
still
it's
we're good.
lots
We're
of
good.
game,
I'm
bro.
good.
Keep it going, man. It's a beautiful story. Beautiful story.
There we go. There we go. So yeah, everyone's tracking. So we're gonna keep it pushing, but understand and then burn this image in your mind as well. Look what's happening every session, and you can expect profiles to change per session. It gives you context. Okay, now I know you guys really want to get into the charts. We're gonna get there. I'm giving you guys, explanations and charts, but we're gonna get into active charts eventually. But for now, let's talk about price structure. So it's important to understand premium versus discount. So if you follow smart money, you probably see a lot of times PD arrays, PD arrays, PD arrays. What does that mean? It just means premium, discount, arrays, which I'm not going to get into today. I'm going to give you guys two PD arrays that we're going to focus on for today. But, um, I will let Professor Liquidity handle the rest of that, not me today. That's going to be Professor Liquidity. And as you go deeper into the boot camp, we're going to also, I will talk about some of some other premium and discount rates. But today we're going to focus on two, and we're going to get to those. But price structure is important to understand premium versus discount. Understand each range you're trading in. This is key. Again, we're talking about the basics, meaning you should always have these on your charts, always have an understanding of what's going on in the price. These are the things you want to be focused on. So you want to pay attention as to whether you are above midpoint of the range for sales. If you are below the midpoint, your focal point should be on buys. Okay, so we're gonna get to the charts. So if you look at the charts, this is the range I highlighted here, from this low to this high. And all I use was a Fibonacci tool to create this range. I mean, to create this calculation. So use your Fibonacci, and then you can uncheck certain numbers you don't see on your charts. But the ones I have checked is the 1, 0.5, and the 0. This just shows, again, the midpoint, the high is at 1, the low is at 0, or 0, whatever. 0 might be the high, whatever. Point is, you see it. From high to low, the midpoint is right here. So in this case, when you see that, when price is above here, price is in the premium, meaning it's expensive. You don't want to be trying to buy. And this goes for any range. What is the lower time frame, high time frame? You want to pay attention. This is universal. What is the range? That's the first question you ask. And once you identify the range, if you're in the premium, you don't want to be buying. Like, and this is where people get caught up a lot. They'll see like a fair value gap, which I'm not touching on yet. We're gonna get there, but they'll see something to go long, but they're going long in the premium versus waiting for price to come down, right, to a discount. Because what does smart money like? What do we all like? We all like discounts. We all like a deal. So you want price to give you a deal, get below the midpoint of a range. Then I'll go higher. There's a lot of, people focus on the 61.8 level, all those Fibonacci numbers. Point is just let it go below 50% if you want to buy. And if it's above 50%, look for sales. That will help you in the long run. Always understand your range, and that will help you determine what you should be doing, what you should be focused on. If you want to be a buyer so bad, right? Let's just right here, want to be a buyer so bad, you have to wait for price to come down into the discount. So this will also help you avoid taking stupid trades once you understand each range you're trading in. Again, the way I look at it is the market's an algorithm. It's ran by an algorithm. So if the market's ran by an algorithm, these things will hold true is that it has some type of timing or mechanism built into it where when price goes lower, it needs to retrace above 50% before it sells. That's how I mentally think about it. Like if I was building it, that's exactly what I'll do. I don't know who built it, right? I mean, the banks obviously, but I don't know the details of it, but you can tell on the charts because these things repeat. The point is, it makes sense that if price creates a range, there's a function where price creates a range. If it starts going higher, ideally, you should only try to sell, or the algorithm only going to sell once it hits the 50% of that range. Then you can start thinking about dropping price lower. All right. Now we're going to get to the PD array. So today we're going to focus on the two. One of them on what you guys focus on fair value gaps, FFG. At the Texas Highs, call them loop zones. But just so we understand that the real thing is a fair value gap. We call it loot zones because it's cool. We know we're Texas heists. We rob banks with no triggers. What I mean, clean heists, clean getaways. So these are loot zones that we could call them. So in loot zones, these are an area of price that is determined as fair value for smart money traders. At Texas heists, it's fair game, free game. You know, price goes to those levels, you're looking for a loot. All right. So again, it's an area of price that's determined as fair value for smart money traders. Also considered a displacement as there's an imbalance of buying or selling within a specific range. As the price trades at these levels, we can expect an expansion. So we're gonna look at the charts. I know it might have been a little confusing there, but again, these are levels. The displacement is just where there's one-sidedness. Price only moves aggressively with the buys, and there's no selling in that same area. The way you kind of think about it is like a paintbrush analogy, or really think about it. If you run the markets, you're the banks. Ideally, the way the market's going to operate, they need to be buying and selling at each price range, each price level. Should be buying and selling everywhere. So if prices goes up, boom, aggressively, all that buying. They need to prices come down and give some selling at that level because price has moved too far. There's displacement, moved too quick, so it needs to come back down, ideally below 50% if we're talking about buys, within that range, and then expand. Okay, so pay attention. We're going to go to the charts, so it won't be confusing. I'll break it down again. Now, look at these charts right here. By the way, quick, can y'all see my mouse moving on these charts or no? Y'all see my mouse moving on these charts or no?
Yeah, yeah, we can see it.
Perfect. Cool. So if you look at these charts right now, we have a bullish fair value gap slash loot zone. Price moved aggressively higher. No selling took place. So this price have to come back in there with some sales. Because again, you need to be buying and selling at each level. That's ideal. That's ideal. So if price expands aggressively higher, you do expect to come back down with some selling pressure or selling taking place within this range. It doesn't have to fill it in. And the key is ideally these fair value gaps, these loot zones, you don't want to see them get filled in. Ideally, the 50% of the range, the higher end of the range is where you want to see price trading to and then take off. So I know there's two contradicting things where it's like, oh, well, you said if there's buying, this to be selling at each level. True, but price will come back to at a later date. Point is when it just takes off for once, only buying, you want to expect selling to take place. If we're strongly bullish, you want to see price move aggressively away from it. So with this PD array is really again, there's an imbalance. There's too much buying here. They need to come back and balance it out with some selling, and then price can take off again. It's fair value, it's free game. This is where price is going to drop into. And then smart money say, cool, we expand aggressively. Hold on, that's too much. You're putting too much money at once, right? And then drops lower, boom. Now let's just buy some more. You know, now we can transact more. They're not going to try and keep buying up here. They want a deal. So below the 50% is range, boom, fair value, takes off. A bearish one, price drops lower, right? Then what does it do? Go higher. It's a bearish loose zone, bearish fair value gap. Again, there's too much selling here. It moved too quickly. It's really between this candle's high, this candle's low, this candle's high. That's the fair value gap right there between this candle's low. High. So it takes three candles to form a fair value gap. The low, right? And then just selling here, the high. Why is that? Because think about it, right? price sold here on this wick, then bought back up to open up here. So which means there's a little buying here because it's a wick and then bought back up to open here, then sold again. So now at this last level that's buying, we had selling only in this little range. And then up here we did buy again, and then yet sold off. So it left a little range where price didn't do anything here. And then price trades in there and then finally sells off. So that's why you want to make sure you mark up the wicks. So the low of this wick and the high of that wick. Those levels, if you think about it, if price went up here a little bit, it's some buying, then it sold to close here. But it never changed this range. So this gives this range, makes this range free game, fair value. Same here, it dropped lower first, but then it bought back up here and closed here. So when it drops lower again, there's already buying that took place at this wick. So we can just use the low and the high to mark it up. And we can expect price again to have some type of reaction here because it's a fair value level. And we see that expansion lower. Then we're going to talk about liquidity pools. So those are the two. Fair value gaps, loose zones, now liquidity pools slash vaults. So these are the highs and lows seen in the market. These are areas where traders typically set their stop losses. Smart money uses these areas to swap hands with retail traders to execute their positions. Liquidity pools could also be used for target purposes for exiting trades. So again, highs and lows. To keep it very simple, highs and lows. That's the liquidity pools. There's a low right here. What does price do? Drops into that. Remember I said they can swap hands. They use this. Why is this important? Why is it called liquidity pool? Because there's orders stacked there. When most people start trading and just traders in general, we like to keep our stop losses where? Ideally around highs and lows of structure. If price goes to that level, guess what? You're going to be out to trade. So there's a pool of liquidity sitting there. That's why price would go there. And since there's a lot of money sitting there, institutions, again, they need to execute their positions. And, there has to always be buying and selling. That's what they say, right? For everybody needs to be a seller. So in order for them to execute their large positions, they need to swap hands. So they know at this low here, there's going to be a lot of willing sellers because at this point, price is dropping lower. So those that are buying are going to be willing to sell or exit their positions here. What can then they do? What then can they do? Swap hands and buy. So that's why it's called liquidity pool. Just an area where there's a lot of money there, a lot of resting orders, obvious level in price. And once price hits that obvious level, boom, job done. Now we can run higher. So this is when they run the heist on those that, aren't paying attention. It's like you're low, you become liquidity, right? Put your stop loss here, price takes that and reverses. And by the way, you see how I ran into what? Another liquidity pool up here. Okay. There's another one. Same thing. Liquidity pool up here. That's a high, single high. There's one right here. Price came close to it, failed, which you're going to see that happen here and there. But if you pay even more detailed attention, look at this right here. I didn't mark it out on purpose, but price ran to that liquidity pool. So this drop here did some damage. You got to think about it. When a price runs a liquidity pool, understand that damage has been done. Understand that there's a swapping of hands that's taking place. So as price ran lower, taking out these lows, when it trade lower, it didn't need to really go below here again. It didn't have to. Could have done it, sure. But you shouldn't be like, well, it didn't take it out, so maybe it's going to come back because it created a double bottom. No. The damage has already been done here. When they ran it lower, boom, took out this liquidity pool. That's done. All this consolidation, back to the consolidation, is them now working in their orders, their large orders, because they've already ran a liquidity pool. They can now then expand price. Price then retraces to what? A loot zone, fair value gap. We're putting it together here, right? You see what's going on? Loot zone, fair value gap right here. And then, missed the wrong thing. Sorry, guys. It's going too hard. And why did my screen stop sharing? 1 second, 1 second.
While it's fixing that, man, guys, any questions, feel free to put them in the chat and we'll answer them at the end of the stream.
Yes, yes. Make sure if you have any questions, do that, please. Okay, so we're getting back to this. Get back to this. I was to getting in. All right, hold on. Where we at? Cool. So this is what I was talking about here. So again, liquidity pool, boom, ran out right there. See that? And then we consolidate, expand, retrace into this loop zone. Was price then do what? Expand, retrace into this loop zone where? But again, these liquidity pools are targets. They're vaults. So the reason why we even call it a vault is because that's where the money is. They really are vaults when they're being targeted for your execution, for exits. So when it drops lower, again, this is a beautiful reaction. Takes out all this liquidity here, consolidates, expands, retraces. And look at what is it retracing into, by the way, guys? Fair value gaps, loot zones, below 50% of the created range from this low to the high, drops lower, below 50%. Into loot zone. Take off, low to high, drops 50% into loot zone. Takes off, low to high. It's not really a loot zone here, so I'm not gonna talk about that, but boom, finally hits this target and we're done. You're out the trade. These are important because I know when I first started trading, I'm just in. I remember I used to have like I mean, my own algorithm, and I'll always be in the blue, always been making money, but I just never knew when to exit. I just knew price, was moving, and it gave me a. I didn't know where to exit. It didn't make sense. But understanding these liquidity pools, understanding where there's resting orders, where there's swapping of hands taking place, what is a vault, where is it being targeted, that'll give you an idea of when to exit your positions. All right. So that's that. I think I actually ran through the whole PowerPoint. Now, what I'm gonna do is, hmm, I'm gonna break down a trade that has all of the elements that I talked about today. And if I feel like going some more, I'm gonna also break down the charts. In fact, we're gonna do this. We're gonna do two things here. I'm gonna break down specific trade, and then we're gonna mark out our charts from higher time frame, lower time frame, and give some clues on what we can expect the price to do, perhaps for this week. All right. So let's get into actual charts. By the way, any questions before I transition to charts, or any thoughts here, guys?
No, fire, bro. Fire, man. Keep going, man. This is not today.
Okay. Um, Let me share this screen right here. Okay. So now we're gonna get into the charts. Hmm. I'm going straight to details on this one actually. So this is NASDAQ, right? This is the 5 minute chart. Let's take it up a notch here. We can do 15 minute chart. So what is one thing that is missing here? In fact, let's take it from the top. We're going to forward chart. I'm gonna try just eliminate some things here for a second. Okay, so we have a forward chart, right? Again, if you just look at charts without any time, you don't know what price is like to do. There's no context, nothing. So now I'm gonna add a drawing or two. Let's do this. I think it's this level right here. Let's do this for a second. 1 second. We're gonna make this a lower time frame. By the way, this is a quick little game here. You can actually put on TradingView, if you go to object tree, right click object tree, a good way to keep yourself, your notes and details, or keep your drawings looking nice and tidy. You can actually create object trees and then create different folders. And now I can just insert these into this folder. All right, LTF stands for what? Lower time frame. And I can then hide them. Boom. So now everything that's lower time frame is gone. So guys, what do we have marked up here? This is one little thing I didn't add as I'll teach you, but it's a 4 hour order block. And again, Professor Liquidity is going to talk about this later, probably I think in tomorrow's discussion or not. But one that we're going to talk about in this boot camp. This is an order block or C4. So on this level is another PD array, one of the PD arrays that we can expect price to react from. Just keep in mind, focus on the blue line. What I'm doing here is breaking down what happened on NASDAQ on Friday to the details, adding all the elements we learned today. I'm putting everything together. So when you're on your higher time frame, first thing we want to do again, we don't execute unless we look at a higher time frame. It has to be a higher time frame catalyst. So as much as this has been moving up, we had this 4-hour level that we have considered as an order block. Let's go into the 1-hour charts. What exists there? What is this? A loot zone. Whoop-de-doo. A loot zone is right there on the lower time frame. That's also within what the 4-hour order block. The two things I touched on were loot zones. Let's focus on that for a second. This 1-hour level is highlighted here for a loot zone. Okay. What did price do? Premium. Let's go premium to discount. A lot of things happen here. Well, first. What do you guys think we're missing here? You guys aren't paying attention. Let's show it's time that we're missing. So I'm gonna add in this indicator that I use. I think it's this one right here. Boom. This one, now we have time in place. So before I do all that, now you have time. Now you have an understanding of what price, right, has done each day. So if you have time, it's important. This is what makes an understanding of what we saw here as far level. As most people see this, oh, we're going high, we've been going higher, so we just keep on going higher, right, from a higher time frame level. But we keep in mind this level could drop price. Then we're going to 1-hour chart. We're seeing more details on what price did the previous day. It had this whole sell-off. Just a straight sell-off. So what happens then? A nice little retracement during Asian session. Boom. Price moves higher. It's not even Asian session, but point is we had a retracement. And if you draw your fib, what are we expecting? We want price to be above what, 50%. So as you retrace, what's the only level? And this is where your focus needs to be. When you're choosing your PD arrays or areas where you're expecting price to execute from, understand that range. Again, sticking to selling in the premium and buying in the discount. So in this case, as price is retracing, you don't want to try to sell before 50%. And the question you need to ask yourself, what above the 50% level, what levels exist? What is there? What PD rates exist? Well, we have an old high right here. We have a loot zone. So we have what of a liquidity pool right here, and we have a loot zone. So there are two elements in price. So what's going to happen there? A swap of hands. So we have retracement. Now to liquidity pool or vault, swap of hands takes place. We're above 50%. We're in the premium. Look how price. This is how you want to look at your fair value gap to loot zones. You don't want to see price trade outside of them. And look at how price was maintained there. This is how you know these markets are controlled. Look how it stops to the T. It didn't even trade outside of it a little bit. You're going to see this happen over and over again where price literally at the loot zone, it doesn't trade outside of it with no bodies. It can go wicks. That's okay. But with the bodies, there's no real movement outside of that. It sticks there. That's why we say markets are controlled. Why would it do that? It's done this over and over again. Look at your charts. Look at loot zones. You're gonna see this happen over and over again. Markets just maintain, consolidate right in the level so conveniently. So if it wasn't a real thing in price, a real phenomenon in price, you won't see this thing repeat. So, anyways, we're on liquidity, price and loot zone. Now we're consolidating. So swap of hands already happened around liquidity. Now you can see them consolidating price. It's on a 15-minute time frame. What do you see? This was a clear, beautiful day, right? What do you see here? Consolidation. So within the day itself, let's kind of bring out the lower time frame drawings now. Now you can see what? Consolidation, right? And I'm going to take away this right here for a second. Now you can see what consolidation taking place. This is what during Asian session, right? Pretty much to London. So if we draw this out, let's do London. London session starts at 2 a.m. 2 a.m. right there to 5 a.m. You see all that consolidation. taking place. Then 7 a.m. pre-New York. So remember I told you guys, keep in mind. And honestly, when I look at London, honestly speaking, it's really from 2 to 7. That's how I see it, especially with indices. But a real number is 2 to 5. That's ideally when that's a London session. But I really expect consolidation from 2 all the way to 7. So I'm just gonna do this. Boom. And at 7, what I tell you guys that is pre-New York. 7 to what? 9:30. What's the price doing? Boom, 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 going higher. And then 8:30. So 7 o'clock, 8:30 reversal. Let's draw this out. 7 o'clock, where's 9:30? Boom. 9:30. So you see what's happening here. What did the price do 7 o'clock? Expands and reverse within one little session, or the pre-New York session. What does that tell you? This is a potential reversal profile because in one session we had a move higher and a move lower. And then keep in mind, what are we in? We're in the 4-hour high time frame level. Remember I said in the beginning, you don't want to frame any of your trades just off the lower time frame. But we're not doing that here. Now we're just seeing the details of price. Since the price is in the 4-hour level, we can then expect some reactions. Now we're watching a lower time frame. Now we're getting more context. What are we seeing there? And we're seeing all this consolidation take place. We're seeing this expansion take place. Expansion and reversal happen within the same session. So now in 9:30, what does price do? Drops a little bit, trades back higher. What is it trading higher into? And this is a loot zone on the 15-minute chart. So now you're seeing a loot zone within a loot zone. So now loot zones on lower time frame are being created when the higher time frame already has a loot zone. These are all the context, all the keys, and it's happening at the right time. So not just about seeing this loot zone, it's like what time of the day is it taking place? So this loot zone is not created during 9:30 opening price. This is going to be highly sensitive. And it's also within a high time frame level, highly sensitive. Highly sensitive. So what does price do? Trades higher, retraces, loot zone, right? Smart money's doing what? Still selling because they already had a swap of hands. That's run out of liquidity I showed you. Even on the lower time frame, even did it again. Consolidated, boom. Runs out liquidity. Now they reverse. Now they retrace. Isn't this above 50% of this range? Look at that. How convenient. Look how price stopped right at 50%. Right there. Dances around. In what? I'm just gonna highlight it. Show the boot camp, highlight everything here. This is a 15 minutes. I'm just gonna use red. 15-minute loot zone, bearish one. Trades in there. All those wicks, you want to see that. It's just dancing. No bodies. Ideally, again, you don't even want to see price strongly trade outside of that or with any bodies or even go to the top. That's not really an ideal situation. So it's even better when you see just consolidate. Bodies are stopping almost in 50% of this range here. So even if you're to do this for a second within the loot zone as well, you want to kind of pay us OD, a little bit OD now, but you want to pay attention to how price is trading in this range as well. And ideally, price should not be really trading outside of the 50% of the range. So I'm gonna do two things here. It's just a little bit more detail, but ideally, it can go to the 75%, but ideally, you want to kind of see it maybe close it. Like what it did here is perfect. It traded into 75% of this loot zone here and then sells off. But you don't want to see bodies really closing close to this. Could it still sell off? Yes, but this is a key thing here with fair value gaps and loot zones. Ideally, you want to see the bodies stopping towards the midpoint of it and maybe at 75% before you see price then dropping. Okay. So I'm gonna delete this one real quick because that was a little bit more details, extra sauce there. Anyways, so price retraces. What is this? Loot zone. Boom, aggressive sell-off. Now, let's go a little bit deeper too, right? If you look on that 5-minute chart, what time did it sell off at 11 o'clock? So still within the window. The starting of the sell-off is within the window that we can trade, that we consider what? New York session. So you can see here, 9:30 to 12. So you have a nice sell-off, and then price continues that sell-off throughout the session. So point is, there's a lot of details that you can pull from here. And you can see how during each session, there's a certain market profile that's taking place, and you need to understand that profile. So as we move from session to session, you also understand we're moving from market profile. We can move from market profiles to market profiles. If we're on the higher time frame level, We're seeing reactions. We want to be able to execute on those. And what we'll be targeting here, guys, on this drop off. This low, this low right here. That's a liquidity pool. That's it. Ideally here as well. And let's just see if price actually went there. I'm actually curious. I don't think it went there. Oh, stop, because this is Friday. So on any other day, it likely would have ran here, but it still ran out what a clear vault liquidity pool. You want to take something off the table here as well as price drives that. This is how many points? I mean, that's 250 points. You cannot be bad, mad about that. So that's kind of the key thing here, guys. Going from a higher time from understanding, higher time from level, then going into the sessions and understanding when to execute. Again, like without the stuff that I know now, without understanding the sessions, I'm telling you, you wouldn't understand where to execute, what time. You're gonna just execute at random times of the day. So what I want you guys to take away from this, understand a couple things. One, when is it ideal to execute? During the sessions. Ideally, the two I focus on specifically is the New York session the AM session from 9:30 to 12, and the PM session, 1 p.m. to 4. But the most optimal time, in my opinion, 9:30 to 12. If you want to take the best trades, if you're patient enough, wait until after 10 a.m. And you should go back test this after 10 a.m. That's when the market's going to be clear. Why? Because the first 30 minutes, they let the retail, the young traders, new traders do their thing, be quick on their hands, trying to make something happen. And then at 10 a.m., they slowly, surely work in their position. That is another key thing here. Again, if you were to look at it from that perspective real quick, you can see starting at 10 a.m. I'm just going to move this here a little bit. I'll move this one actually instead. 10 a.m. Where's 10 a.m.? So at 10 a.m., if you just waited a little bit, I'm delete all these colors. You guys get a key here already. So I'm delete this. So if you waited till 10 a.m., you would now see it clear. Okay, price already dropped. It's 10 a.m. It clear just retraces into an area and then sells off. So after 10 a.m., you go, okay, let's see what happened. Price already dropped. Okay, I can expect nice little retracement and then sell off. Simple. So that's when the markets really move. Okay, that's some details there. I mean, I don't know. Like, should I? I mean, I think I finished right on time, unless I break down if I want to break down gold and expectations there, which I think I'll save that for a different day. I mean, what do you guys think? Any questions so far? I know I said a lot.
Well, yeah, I think that was solid, bro. That was a beautiful story from beginning to end. Even even though we're gonna get more deep into the vaults and loop zones tomorrow, you can see Backsnatch really putting it together with the whole market structure, with the whole time and all of that, and not trading consolidation. Really waiting for that expansion phase, and then using the loop zones to get it for the continuation. So. I think this was solid.
Let me do
I
this.
hope y'all took
Let me,
notes. Yeah, go ahead.
let me do this. So, and I'll make this one short because I'm only going to focus on two different areas. I know
Mhm.
gold is like in a weird position right now, but just so they can have a little thing
Yeah.
to take home and a way to like kind of as we're since we're going to do this for almost a week, I guess it's ideal that they're keeping track of certain levels on your charts so we can
I like
talk
that.
about it. So these are the
I
things
like
I just
that.
want to do for gold specifically. I want you guys to just pay attention to these levels. So this is how I'll go about doing this, just with the context of understanding loot zones and liquidity pools. So we're going to do gold very quickly here on the high time frame. This will be how I expect price to move. Or what I will be watching. This loot zone from this candle's low, this candle's high. Right? This is the levels I expect I'll be watching on my charts. So I'm going to do a very, very quick markup. I'll do a little bit details, but very simple, not super detailed. So you should have these levels on your charts as well, so you can follow along, and we can talk about what happens at these levels as price moves throughout the week. So we have what this little loot zone here, where on the higher time frame, this is here. So we're gonna watch how price trades in there. You can already see how price has traded a couple times. You see the reactions, right? And then here is what? A vault, potentially. Here is also what? A nice little swing low. So swing lows are the vaults, liquidity pools. So these are potential targets. Now, again, if pricing easy, trade higher. But this is what I'm watching. I'm trying to see if these vaults could get hit. On the higher end of things, the vault is really all the way up here. But we also have this level. So these are levels I just want us to always to keep in mind throughout this whole boot camp here. Goes on high and goes on low. And we're gonna put all of this right here. If you want to do this, this is good. I'll put mine in a folder. So a little extra energy, a little bonus, a little bonus. I'm just gonna delete this. I don't know what this is, but I'm gonna delete this crap. So this is what I'll be watching, these levels here. This loot zone here and loot zone here. Then vaults and vaults. Okay, so I'm starting from the daily chart. In fact, let's look at the weekly for a second, but I'll just anything there. Yeah, cool. And this is the thing, guys. This is really with gold. This is why I'm expecting some sales too. One of the reasons, technically. What did I mention? I said like we want to be trading smart money. Ideally, wants to be trading at the 50%. So the fact that this range has a low here, high, the 50% is at least at 3,000. What number is that? 3,870, 75 ish. So I want to see that take place. That's kind of where I'm like my expectation from a weekly basis. So this is how I'm also incorporating the weekly chart. We have a range. Can price go below 50%? That's what I'm watching. Daily charts. We have this nice little loot zone here. So that's context on lower time frame, on higher time frame. More context. Daily chart is a loot zone. Can price trade, make its way below this vault and that vault? And at that point, if we retrace, cool. But I want to see that pullback take place. 4 hour. Whoa. I don't know what's going on. I just had. Why did that do that? Daily. It shows on the daily chart. That's weird. Do you see my screen? Why is that? The
Hey,
daily chart,
that's first.
huh?
That's the first.
They want me to get the
I don't
game.
know
What's
why
going
it's
on, dude?
doing that.
What's up with that?
Are you on regular trading hours? No, you.
Nah.
I don't know, bro. That's pretty weird. Whoa.
Hey,
Mm,
that's
Yeah.
so weird. Let me try
She
this.
don't want to give, don't want to give you
They don't want me to give the game, bro. Like, hold on. I'll just.
the.
That's weird. That the. Huh. Let me try this here. That's so weird. Okay. Does it already have the markings? Cool. All right, so it ain't gonna stop the shine. We're gonna find a way. That's what we do. Persevere. That's what trading's about. We don't stop just because a little hiccup in the road. So, anyways, daily chart, current interval and below. So, 4 hour chart. All right. Let's talk about this here. It kind of lines up with the daily, so I don't really want to do too much. But if you pay attention to this over here, which I called out last week, this is a loot zone. Now, an inverse loot zone. By the way, every PD array has an inverse. So if we trade below it, what can we then expect to act as resistance? That's a real support and resistance in the markets. These fair value gaps, these loot zones are the real support and resistance in the markets. That's how I look at them. So, anyways, we have this level here. So until we actually trade, to me, I'm not really going to change my stance on being bullish or at least expect it to run here as long as we're below this 4 hour level. Now, if we find our way above here, this is how I look at price. So now if then. If we find our way closing above here, what is obviously in place? A vault, quiddy pool, with what? A daily level here. So then I can expect price to then go there. And if we want to make our way higher again, cool. That's fine with me. Because as much as I want to see 50% of this range, we also got to keep in mind from high to low here, right? 50% is what? I mean, perfectly aligned here, so we're good. We can easily sell off. We can easily sell off. Now, from this high to low, though, what else? I'm gonna delete this guy. Sorry, one thing. this, that. So now from this high to low though, high to low, see that? 50% is right here. So if we do get a movement above here, strongly closing above here, vault here, 50% is here. All right, time from level here. That could be an easy pull higher. Okay, so just point that out. If we do get close above here, again, we're going to talk about this throughout the week. If we get close above here, expectations are these highs could get tagged. As long as they stay below here, I want to see it run lower. So that's that. And then 1 hour chart. And you see at this point, there's nothing to reach breakdown on 1 hour chart. So that's what I mean by I'm not framing my trades on lower time frames. Only when the day starts, when we get into the session, then we can start going into a little bit more details. But for the most part, right now, we have the high time frame levels in place. So I don't want to execute anything. I'm not just going to buy right here in the middle of nowhere. I'm not going to buy, I'm not going to sell in the middle of nowhere right now. I have to wait for price to trade higher first, and then give me a reason to sell. Or if it wants to go lower first, then we can specify. Point is, we have these reference points that are points of interest, if you want to call it that, or areas where you want to expect some type of reaction. Unless price hits those levels, there's nothing to do. You're better off sitting on your hands. Okay, so don't actively, stupidly trade. Don't act. Don't be active. Right? It's called what Charlie Munger said. Some people think being active, is a way to make money, but he calls it active stupidity. Sometimes there's no reason for you to be in the markets. You just want to press buttons. That's just human nature. You just want to do something. But what we have to learn is to be more patient and wait. Wait for price to get to these levels at the right time. Right? Notice how I'm not like, I don't really care to be checking my charts right now. This is why understanding time is important. You don't want to be on your charts just geeked out, ready for price to hit a level. In fact, if price is even up here at this time of the day, I probably won't touch it. Now, this is gold. So gold does move in Asian session. That's a whole nother conversation. But if it's like, NASDAQ or Forex or something of that nature, for the most part, even if price is already up here at a level of interest, I'm still not trading because I want time and then the level to match up at the same time. So it's not just about having these levels. Oh, it hits there, I'm gonna do something. No, it needs to hit at the right time. And you're gonna build that patience when you see it happen over and over again. If not, you're gonna be jittery, just watching, waiting for price to get to this level at any time of the day. It doesn't. If it gets here at midnight opening price, I mean at a random time, I'm not interested. It needs to be during a session. If it hits the level during a session, perfect. Now we're talking. Now we're looking for the reaction. Now we can pay attention to what market profiles have existed in each session. Have we now created displacement? Have we created a fair value gap? Well, the one thing you're looking for in price is a fair value gap, a displacement. You want to see that take place. If that's not taking place, there's nothing to do. So expect price to hit these levels at the right time. Timing is everything. Once it hit at that time, then you're now looking for expansions. This is literally what happened here, right? Just give him the game. Go, and I'm going to be quick on this one because this is just bonus, and we're getting to an hour. Anyways, whatever. Gold. What did gold do on Friday? A lot of people are expecting to go higher. What is this right here? Running out a high. Hitting what? A level that already determined, or we have determined as smart money. Remember, this green level's on the daily chart. This blue level's on the 4 hour chart. There's a clear example. There's a high right here. We wait. This high is created at 4 a.m. What do we wait till? 7 a.m. What happens? Boom. Price runs higher at the right time. Taking out pull liquidity right at 7, 8 a.m. Doing it at the right time. Doing the sessions we like to trade. Right? It's going to lower time frame. Boom. So it takes out those highs. So now it's consolidating a little bit. Well, what's happening here? Swapping hands. They're swapping hands because some people are selling early, but then we wait to 7 a.m. They get knocked out. But as they get knocked out, we're at a higher time frame level. We're swapping hands to consolidate. What do you now see here? A displacement. Fair value gap right here. Do you see any bodies? Let's draw this out. Price kept on wicking here, wicking here. Nobody could even close in there. That's more stronger. If there's no bodies willing to even close on a 15-minute level in this area, you want to expect that to deliver sales. We didn't have a single body. Yeah, went up here, dropped, went up here, dropped, went drop, drop. And this 15-minute level is very close proximity to what? The daily level. In fact, everything's here. 4-hour chart, daily level, 15-minute, at the right time of the day. Sales. So I was actually in these sales. I didn't call in the chat. I don't call every trade I take. Well, in these sales, I showed it to liquid extractions and profits liquidity. But this is a beautiful example of what I'm talking about here. At the right time, price hits the level, right session. This is a loot zone. Nobody's closed above this. What do we have? Liquidity, vaults, lows. What does price do? Boom, finally delivers aggressively. Okay. And that was that. After taking out a vault right here, liquidity, boom, and then it's done. And it's during PM session, what happens? Price then moves a little higher. But for the most part, you saw the sales deliver beautifully on Friday. So this is exactly what I mean. At the right time, you want to be in the markets. Don't just be in there. Don't get jittery. Don't expect price like if price hits a level, wait for the set it to be at the right time, right session, then you execute. So I'm gonna stop right there. I gave too much game, too much sauce, which is that's what we're here for. We're here to give it to you guys for the free. So I hope that was insightful. But at this point, I'm gonna slow down, and I thank you guys for coming and joining the Texas Heist Bootcamp. We got many, many more to come. I think Professor Liquidity might be, doing something tomorrow. I don't know exactly what he's going to cover right now on top of my mind, but if this is helpful, share with a friend. This is free right now. Share with a friend. Watch this video. Save it. This is a game. We're making guys be light years ahead of everyone else that's looking at the markets differently. This is smart money concepts. I've been trading for almost 6 years at this point. Until I understood these elements, I was lost in the sauce. This right here gives you more clarity as to what price is likely to do, and it'll make you understand how to reprice easier and better. So that's 101, market structure 101 and 102.
Man, beautiful, bro. Beautiful, bro. Beautiful, bro.
Solid work, man.
Oh my goodness. Hey, man. Hope y'all took notes. Luckily for y'all, if you were late, you missed it. Once this live ends, it will be on the YouTube page, so you can go back and, like Backsnatcher said, rewatch it. So tomorrow is going to be day 2. Entry models. I'm going to be going over in more detail, how to precisely get into, the banks and extract that loot. Okay. 7 p.m. tomorrow, same time. Day 3, Tuesday, risk management. And then day 4, we're gonna go through lots of examples, putting everything together. Okay. Cool. And then in the description of this video, there's a link to join the Discord. Okay, so if you're new, if any of this sounds unfamiliar, go ahead and join the Discord link. Okay, in the Beginner Start Here channel, we have a free beginners course. Okay, we have everything you need there to go to crawl, to walk, to run, and then once you can run, you can now really take this advanced thing that we're telling you, and you can sprint and take off. Okay. All right, so appreciate y'all. Have a good night, and we'll see y'all tomorrow.
Yes, sir.